Hi there, welcome to Grain TV. It's Tuesday, April 19th, and what a day it was. Let's take a look at the grain hedge trading platform and see where we closed. In Chicago, beans crushing it to the upside, gaining 31.25 cents on front month May. Beans in November were also up 28. It was a record day, at least in terms of what we've seen as of late. Corn was up 3.5, and wheat doubling down on its 13-cent advances with 2 days in a row, gaining 13.5 cents a bushel. Today, there was just more continuation of the news of wet weather in Argentina, dry weather in Brazil. The forecast looks to be about the same. We also had a spark from a string of really good export news. Let's go across the board here and see what we saw. We saw exporters sell 241,000 metric tons of corn. Of that, 65,000 for old crop, 175,000 for new crop. In addition, 380,000 metric tons of bean for Mexico. Most of that going in new crop delivery, 332,000 of that for new crop, the rest old crop, and 105,000 metric tons of soy meal. So all of those business deals got done and got reported today, and that just got a lightning round going in the grain markets, especially beans. One thing I want to talk about is this Brazilian real issue, and that has certainly been a catalyst. We've been seeing that Brazilian real strengthen in the last 6 weeks ever since talk started to surface about current President Dilma and potential impeachments there. And now we're at that point where the lower Congress has voted to impeach her, and it seems likely she will be impeached. But that doesn't necessarily mean a quick fix to Brazil's ongoing economic woes, and that is certainly what the Brazilian real is trading, is a new solution that brings economic prosperity. And I wanted to talk about Dr. Cordier, who is an agronomist and specializes in South America. He had a nice article today, and I'm going to quote from him because it reinforces some of the ideas I've been talking about. And I'm just going to read from this. He says, the idea that the currency would strengthen if she is impeached is counterintuitive. The logic is that anyone other than Dilma would be better for the economy. My concern is that if she is impeached, there would be a period of tremendous uncertainty while a new administration takes shape. The new administration would have to appoint new ministers, new economic policies would need to be formulated, and new alliances formed in the Brazilian Congress. Also, he goes on to say, just changing presidents does not change the underlying structural problem in the Brazilian economy. Brazil is not going to emerge from the current economy problems for any time soon. There have been 2 years of shrinking GDP, and even the most optimistic economists expect zero to minimal growth in 2017. Basically, he goes on to say what I have been saying, which is don't bet on a new regime changing the Brazilian economy, and therefore the strength in the Brazilian real may just be a flash in the pan. And yes, while the Brazilian real was up 1% today, you got to wonder how much longer this will hold on. But in the meantime, it is certainly acting as a catalyst for beans. Let's take a look at November soybeans, and let's take a look at this 5-minute bar chart from the grain hedge trading platform. And what I want you to see is just how bullish this market really is, because what we're seeing is very strong price moves in very short periods of time with little pullback. And when we do get any sort of minor pullbacks, what we tend to see is more active buying. That's an indication of new longs. It's an indication of short covering going on as a result of this upward mobility. And so if you look at the first 10 minutes of trade, that's 2 bars here. We had a 10-cent move in that 10 minutes right out of the chute here this morning. And we sort of traded sideways a little bit. And then about an hour later, we moved another 10 cents higher over about a 30-minute period. And then we kind of pulsed back down to those lows. But, going into the last hour of trade, it was just nothing but upside with a few minor dips along the way. This is a market that, in my opinion, is going to go through 10. We're just a little bit of change away from $10 on November beans. But if I'm a producer, I'm getting very eager to price new crop beans when I see $10 on the board with the fundamentals the way they are. We are not running out of beans anytime soon. The U.S. has plenty of beans on hand. We are seeing basis levels weaken quite readily, more so than we've seen all year long, because of this big rally. So we know bean supplies are adequate. That's not going to change. This Brazilian real, in my opinion, will soon correct. If it's not in the next few weeks, maybe a month or two down the road. But chances are when it corrects, that really takes the steam out of the bean market. And so the farmers, I think, out there really need to not miss this opportunity to take advantage of this. If you have questions about how you might like to look at Grain Hedge and see how we can help you in your own trading situation, by all means, visit us online at grainhedge.com or give us a call 877-472-4607. Silver right now is at historically low levels. Starting with the financial crisis of '08, silver prices made an epic run from $10 an ounce to $50 an ounce in just 3 years. Silver looks poised to make another run higher. Here's why. Today's headlines show wide-scale economic risk, central banks using negative interest rates to stimulate economic growth, and the continued explosion of government debt around the world. All these factors are creating a flight to safety in physical metals. On the fundamental side, high mining costs limits new silver supplies, while demand for silver continues to expand through rapid use in cell phones, plasma TVs, and batteries. All these factors suggest taking action at today's prices before silver reaches $25 an ounce. Our precious metals desk at Grain Hedge can educate you about investing in physical metals. Their goal is to put the most amount of silver and gold in your hands at the least cost. To get started, contact Rodney at grainhedge.com or by phone at 877-472-4607.